Well, good evening, everybody, and welcome along to this live webinar. It is a continuation of the content collaboration series between Property Tribes and our friends and partners at Lendlord. And joining me, as always, from Tel Aviv in Israel is Lendlord CEO and co-founder Aviram Shahar. So good evening, Aviram.
Hi, good evening, Vanessa. Good evening, everyone.
Before we get going with this, just a very quick and exciting announcement. We're very pleased to say that Lendlord will be exhibiting and speaking at the Property Investor Show in October. So rather than seeing Aviram on the Zoom screen, as you have been doing for the past 18 months or so, you'll actually be able to meet him and the rest of the Lendlord team in person at the show. It's a Friday and Saturday in October, the 15th and 16th, and tickets are free. So it really is a good day out. So please do book your tickets. Nick has put the link on the chat for you. Free tickets, great day out. Avram, I guess you must be really looking forward to meeting Lendlord users in person after, you know, all this time of being sort of shut away during lockdown.
Yes, absolutely. And actually, it's like our first physical conference, as we launched Lendlord in late 2019, and then COVID started. So we did all of the events online, and this is the first time we'll have a stand. So we'll be happy to meet our users and new potential users, and engage and hear their feedback and show some new stuff. Yeah, it's very exciting.
Yeah, and going to the Property Investor Show, one of the things that it's so great for, because I've been going for probably 10 years or so now, is it's great for getting answers and solutions to problems. And that's really what tonight's webinar is all about. We've taken a tip from the Property Tribes Forum, where so many of our discussions are what I would call landlord conundrums or dilemmas, where landlords have various choices and they're not sure which one to go to. And very often these kind of answers can be gained from, you know, discussions on the forum, maybe your kind of intuition, what your gut instinct is telling you. But actually, one of the best ways to solve many landlord problems is through the use of data. And that's where Lendlord comes in. So it's not about guesswork, it's about actual numbers. And the great thing, Avram, about numbers, as we always say, and it's worth reiterating, is that if you put the correct inputs in, your outputs are going to be accurate, and actually numbers never lie.
Oh, definitely, absolutely. And I think these days it's even more important just to make sure that you store all your details in a digital way. Everything is can be accessible from any device, and then the benefits is basically to see the insights. So you can be in control of your portfolio, of your data, of your important key events, and you can also get insights if you can do something better. I think this is one of the benefits of using a digital tool such as Lendlord.
I think it's called kind of having an edge. Using digital tools can just give you that little bit of an extra edge. And as Avram says, in a post-COVID world where we know that risks have been amplified, it's very, very important to do your extra thorough due diligence and research and try and give yourself as much as of a kind of extra edge as possible. And as Avram said, that is where Lendlord comes into its own. So one of the questions that pops up a lot on Property Tribes, Avram, is landlords looking at their portfolio and they're not sure whether to sell a property, and if they sold that property they could maybe buy two say less expensive properties, and how that would impact their cash flow. But I think if you're looking at your portfolio with a view to selling a property, I think it's absolutely imperative that you actually understand the strengths and weaknesses within your portfolio. And that's something that Lendlord can assist with. And Avram's going to show us how you can assess your portfolio.
Yes, definitely. And this is what we'll do this evening. So Vanessa, you will mention the post or the dilemma for Property Tribes, and we'll do a live demonstration. So let me share the screen. We start with the first demonstration. So we will start with this one. How can I assess the strength and weaknesses within my portfolio? So this is my Landlord demo account. So we do the demonstrations today on this account. So first and foremost is storing your data in one place in the cloud and have the ability to slice and dice, to apply some filters and see different views of your data. And this is the first thing, store the data so you know where you're at and what are your current metrics. So in Lendlord on the My Portfolio page, this is the place to store the details of all of your properties and review them in different views. So you have the default views with the default, the predefined default views the view that we defined in the product. Then you can take a look on the equity view. So in each property, you can see how much equity you have and what is the loan to value of this property. You can order by, so you can see from the top to the bottom and where you have room in terms of equity. Of course, in the summary glance, you can see the high level overview of the portfolio. So you can see the portfolio LTV basically for the entire portfolio. This is also important, and we'll touch it in one of the points in terms of finance and mortgages, because some lenders look at this metric as well. Then you can see your mortgage view. So here is all the relevant data that is important if you are going to take a new finance or to remortgage one of your properties. We have the view of property details. So in this view, you can see some details if you entered about the specific property in terms of number of bedrooms, internal area, and number of bathrooms. And then you have the insurance data. So these are the fields that are relevant to your to insurance companies, basically. And the good thing with Lendlord is customized. So you can create any view that you want. You just need to create, this is my new view. You select the columns. I want to see the address, the date of purchase, the purchase price. And you can also search for specific fields. So I want to see my mortgage start date and the rate expiry date. For instance, I click done, click save, and I created a new view. So basically I can define and customize my own view. This is a great way to look at the data that you want to look. And you can also order by and change the order of the columns and save the view. Another thing is the performance. So if we want now to take a look on the strengths and the weaknesses. So first thing is after you edit the property, you update all the details, you can upload the documents. Then let's take a look on the performance of the properties. The best place to do it on Lendlord is the profit and loss page. So in the profit and loss page, you can see the income and the expenses on the entire portfolio and for a specific property. You can apply a filter. So if you want to take a look on a specific property or subsets of properties together, or you can take a look on a specific owner. So if you want to see just Kate properties or Dan properties, or if you want to see just the share of Dan, this is based on the percentage that Dan holds on this portfolio, and this basically properties that he holds. So this is a great way to filter the data and see the performance of the properties. Now, in order to understand which properties underperforming, which properties outperforming, I will go back to the My Portfolio page. So after you track the expenses and income, and I will show like in a second what is the best way to do it, you can switch to the performance view. So in the performance view, you can see the last 12 months net cash flow on each property, and you can see other metrics. And each column can be also sorted. So I can order by the cash flow, and I can see for like from the bottom to the top, like which properties have negative cash flow and which properties have positive cash flows. And then I can take a look on the gross yield. Gross yield, we calculate the rental income, the gross rental income without taking into account the expenses on your entire purchase costs. But we have the cash on cash. So the cash on cash, we take just the net cash flow on top of your cash investments. So we eliminate the mortgage and we take only the net cash flow. So this is a great way to take a look on each metric on the properties. And there is another way to do it, and this is in our weekly report. So in our weekly report, and we send it every week, you can also access it by just typing interactive report on the URL, but you should receive it to your email every week. This is a great way to review the entire portfolio and get a high-level overview on your properties. So you can see again the portfolio LTV, how much equity you have if you want to go to higher level. So now you're on 52%. If you want to go to 75%, how much equity I have in this property, in this portfolio. Then some saving opportunities that we will touch them later in this webinar. And then some metrics about the performance of your portfolio. But I want to go now to start reviewing my properties. So if you click on the picture in the background, so I can start reviewing property by property. So this is the first property. I can see the property value. I can also update the figure if I think that the value was increased. Just a sec. Okay, so there is a slight increase. I can use the estimation of our property data API just to make sure that I'm in the area of the value. This is demo data, so not sure I will get the same amount. That's fine. You don't have to use it, but it's definitely something that can help you understand the value and see what is the current mortgage balance and the level of equity of this property. Again, you can play the game for this property if you want to take it up to 75%, how much equity you can release. And then this is very interesting. So here is a great place to compare your properties. So you can see that this property, in terms of cash flow, net cash flow, ranked 9 out of 15. In terms of cash at cash is 8 out of 15. So it's the same game that I showed you in my portfolio. So you can just like order buy and then see the properties in list, but perhaps it's a nicer way to see how this property performed in the last 12 months and how basically it stands based on the, like compared to the other properties that you currently hold. Then you can see the monthly figures. You can also update it from here. Some tax insights on this property and reminders. Then I can go to the next property and I can go one by one. So the weekly report, the interactive report is a great way to review the data. But the key is to keep the data up to date. So on Landlord, the first time you set up your account, you need to upload the portfolio. You don't have to put all the details. You can put very few details and then tweak it and add more details as you go. We also have opportunities to upload the portfolio spreadsheet. You can use your own spreadsheet. It doesn't matter. And you can map your fields to the platform fields. You just make sure that the first row of the CSV file, it's like Excel file that you save as CSV, contains the name of the columns. And then you just need to map the name in your Excel to the name of the fields in our platform. Then you click continue, you can review the data, and when you click confirm, you can upload the data very easily. So this is a great way to upload portfolio. So this is what kind of something that we need to do once, just like to upload the property details. You can also upload documents if needed. And then the next thing is to update your cash flow. And the best thing to do it is from the transactions page. So here you can update income and expenses and allocate them to a property. And if it's a rent payment, you can allocate it to a tenant, and then you can also track your rent collection. Vanessa, I want to jump in. I think that this basically, I think in terms of strengths and weaknesses, the basic point is to put your data, then review the performance of the properties. And I think that we can touch, like another thing that is important is the insights in order to track important key events and also to see like saving opportunities. It's also important. But perhaps we can stop here for a sec to see if there are some questions or clarification.
Yeah, this is an interactive webinar. So if you have any questions, please do drop them on the chat and we'll do our best to answer them. I'm sure you'll all agree that's extremely impressive software, and you know, you just seeing Avram demonstrate how you can use the interactive report as part of this process of assessing your portfolio, I think is absolutely incredible, and the level of granular detail is really quite something, and it can really help guide you to make wise investment decisions, and that's what this is all about, really. It's about mitigating risk and helping you make wise decisions of how to move forward and grow your portfolio. Are you ready to move on to the next topic, Avaram?
Yes, sure.
So another question or dilemma that comes up on Property Tribes fairly often is about how to find the best mortgage products. And I think it's worth noting that the current mortgage market is very fast moving. There's new products coming out all the time. It's extremely competitive. There's some incredible rates. And you know, on one day there might be no products available to help you move forward with your certain set of circumstances, and then the following day there's a product that you meet the criteria for, or your property meets the criteria for, and you qualify for it. And you know, I've mentioned this before. I had an example, well, it's quite a few months ago now because my remortgage is coming to fruition, but I had a property that I wanted to remortgage, had a significant amount of equity in it, but couldn't find really anything that would work for it because the rental yield was quite low, and I was looking at, you know, second charge loans and things like that, and then suddenly a product was released by Pepper where this property met, and I was able to do my remortgage. So again, keeping up to date with mortgage products is really, really important, and one way to do that is via the Landlord Finance Hub, and this is the part of Lendlord where you can assess what deals are out there that you meet the criteria for. And Avram, this is basically, it's got an API from a feed of all the different mortgage products that are out there with the lenders on the panel that you use, which is very, very wide ranging. And essentially it's updating on a regular basis, and new products that are released will appear on it shortly after release. And it's just constantly updating, isn't it?
Yes, yes. So we have a live feed of mortgage products. And the most important thing is that we have an engine that search the portfolio and analyze it. And the analysis is based on the criteria of the lenders. So this is very powerful. It's not just like we show like the mortgage search screen. It's not just a regular search like you can see on Money Supermarket or Competitor Market. It's based on the data that you entered, and I will explain how it works. So after you put your portfolio details, and it's important also to make sure that you put the right ownership. So private property or a company owned, it's very easy to update. Just click edit, and then in the ownership put company, and then the platform will track it as a company owned property. Then go to this page, available lenders. So it's a link, blue link, just near to my portfolio title. And then in this page, you can see a summary of your mortgages and the analysis of your portfolio. And you can play with the owners. So let's say that Kate and Dan apply together. So when they apply together for a mortgage, the lenders will take the portfolio of Kate and Dan together, and they hold 4 properties with 4 mortgages, and this is the distribution of the mortgages by lenders. This is the stress test. So we stress test their portfolio based on 4 different rates, 4, 4.5, 5, 5.5, and we take the criteria from the lenders. So here you can see the lenders that they don't meet the criteria for. And you can see also what is the reason why they didn't meet. And it can be also related to portfolio LTV. It can be like total mortgages, mortgage balance with a specific lender, or total mortgage balance across all of the portfolio. It can be many reasons that we capture. And based on that, we analyze and show you which lenders are available for a new mortgage and which lenders are not. Then you can play with the owners. Okay, so if I will apply together with James, so Dan and James together, then the situation has changed because the ICR number is higher. The ICR basically stress testing the portfolio under risk. So how much rental income, like in a high level, you have in order to pay your mortgage if the interest rate goes up. And then if you have a good ICR number, more lenders are open to you. But of course, if you have more than 10 properties, for instance, then there are some mainstream lenders are not available for you. So we do everything automatically based on the input that you put in this page. The next thing is to go to the mortgage search page. And here you can search for a specific mortgage. You can do it for a remortgage. And if you put a remortgage, you can just select the property from, and we will take the data for my portfolio. Let's say put 25 years, and then you can run a search. So this is a search for remortgage with capital reason. Actually, it's without because I didn't put the extra loan that I want. And you can see the results from different lenders. Then I can play again here with the applicants. So if it's Kate and Dan, and I think Team W is not a match for them, I will see results from other lenders. And you can do the same, not just for remortgaging. So yes, we see like results from different lenders. So you can do it also for a new purchase. So you put the purchase, basically the property value or the purchase price, better to put the minimum out of it. Then what is the expected rent? Let's say 2200s. How much you want to borrow? You can play with the LTV. The LTV matters. So if it's lower than, let's say 50% or 60%, you should get a better rate. And you can play if it's an HMO property, it's different kind of products that are available, and you can run a search. And again, you can play with the applicant. So you can do many scenarios to apply for a mortgage and see different results from different lenders. And see, okay, so if I apply as a company, you can also choose the specific company, because if you have already properties on this company, we'll take it also into account. So then you can run a search and see, okay, if I apply as a company, which products are available for me right now. And then, of course, you can also apply online. So currently what we have is a partnership with TMW. So you can call their direct phone or schedule a call, or you can just send a message in the chat bot if you want me to introduce, or our team to introduce you to their managers in the buy-to-let team. It's a great service, and you also earn cashback. So we earn a commission, and you earn cashback based on the size of the loan. Or you can go with our mortgage partner. And this is also a great service, no broker fees, and you can earn cashback. And the next thing is something that we are now working on it. It's that you will be able also to apply online through Lendlord. It's not live yet, but we will announce that. So basically you can start the process for applying for a mortgage, like in-app, and not just seeing the options, but also start to interact with the broker and with the lender. And the last thing for mortgages is the insights page. So in the insights, you can go to something that's called increased profit, or from your dashboard, you can see every week what is your potential savings. So our engine search your portfolio, and based on the data that you put. So it's very important to put the early redemption fees. So if I go back to my portfolio, I click edit. In the mortgage section, you will see the early redemption fees. So you can just make sure that it's up to date. And then the engine will calculate if you have potential savings based on these penalties that you need to pay. And if so, you will see it here. So, the best thing, go from the dashboard. I see I have 7 different opportunities to save this amount on a monthly basis. I will click on 7 opportunities, and I can review the opportunities here if I want to get more details. By the way, so here I can see, okay, I can increase my monthly profit by £177, and I can also earn £100 in cashback. I click proceed, and I can see, okay, so I can remortgage to TMW and get this rate. If it's a rate switch, in this case, it's not, if it's expired in the next 3 months, perhaps it's better to do a product transfer, and then you can stay with the same lender. It can be, let's see if I have another example. So for instance, this is a product of Paragon, or I have also a product from Vida Home Loans. So this is also a range of rates. So of course you don't have to remortgage, but here is a great place to see if some opportunity to save on your mortgage costs, and also to see which products are available for you right now based on your profile. Yes, Vanessa, do you have questions?
Absolutely fantastic. So you can see that Lendlord is busy in the background scanning what's available out there and updating your software, letting you know. And it's almost doing stuff that you may not even know that you're able to do, if that makes sense, which I'm sure you'll agree is extremely powerful. We've had a question from Kip Avaram. He would like to know, is it whole of market, the feeds from the lenders, or is it just a restricted panel of lenders?
So it's 30 lenders, 30, that we support right now. So it's not 100% whole of market, but it covers, I think, the most active lenders in buy-to-let. So we do only buy-to-let insights, not first-time buyers. So I think it's pretty with very high coverage. So I think if, the best rates should be here. I don't think that we have a lender that should be more competitive, but we are open to it. Like, it's very easy for us to add lenders. So if you have suggestions also, like lenders that you want to see on our panel, just let us know and we can add those lenders as well.
Mm. I think it's interesting because when you're a newcomer landlord, you're probably only familiar with the high street banks, and actually they don't have particularly good products. They do if it's very low loan to value, but many of them don't actually have much of an appetite for buy to let, and actually make it quite unattractive to use their buy to let products. But in the background, on in the unregulated kind of buy to let sector of lenders, there's many lenders which aren't household names. They're well known to seasoned landlords, but like TMW, Paragon, Pepper, other such lenders, and they have really, really competitive products, and they're all vying all the time to get landlord business. And we've seen record low rates in the last few weeks. We've also seen trends towards green mortgage products to encourage landlords to opt for properties with higher rates of energy efficiency because of what's coming in 2028, I think it is. So a very, very competitive market out there, and one to take advantage of to grow your portfolio for sure. Damien would like to know, do you have to input every rent received, or is there a bank link? Likewise with expenses.
Yes, we have a great bank feed that you can use, and you can, yeah. So this is a premium. I think we need to say. So if you want to upgrade to our premium plan, you can use the open banking. The best way to do it is that I will switch account to take 10 seconds.
We actually do have a separate webinar demonstrating this for those who are interested. You can go into the Lendlord Digital Life category of property tribes, or you can look on the Lendlord YouTube channel and you will find an in-detail webinar of how to link your bank account and the feeds.
Yes, it's very straightforward. We use Plaid as a provider, is regulated by the FCA, and Lendlord as well, like have approval from the FCA to be an agent of Plaid for the open banking. So you just need to search for your bank and then put your credentials. Everything is secured, and we don't have any of your credentials. We just get the read access. So the platform reads the transactions every day from your bank account, and then you just need to link it to a property, and then to a tenant, to a specific payment, and then you allocate the transaction. We'll not do it here today, but we have a webinars like just for that, and also Nick will put my Calendly link on the chat, so you can schedule a call with me, and I can do a specific demonstration for your needs. But basically, in the rent collection page, if you track it from the transactions, you can do it manually, you can do it with spreadsheet, or you can do it with the bank feed. And then you will see, okay, how much was expected in August, how much was paid, how much is due, how much is overdue. The accumulated debt is if the payment overpaid, like in months after, or did like the two installments, you will see that this is something. So I can, let's say, select a specific tenant, so I can see how much this tenant owes me for the entire year, for instance. Basically,
We have another question from Kip. He says, can you carry out a sensitivity analysis for the portfolio, for example, if the market declined by 5 or 10%? The answer is yes. We actually also have another webinar on that, about stress testing your portfolio against market shocks. And that would be a very sensible thing to do, just to understand your position if there was a price correction. Although typically buy-to-let is a long-term investment, and if you're not selling, it's not going to impact you per se, unless obviously it increases your loan to value, which if you're a portfolio landlord with 4 or more properties, which is the definition of a portfolio landlord by the lenders, then you may struggle to get financing because of that. So it is a good thing to do, and it's a good thing to really understand how robust your portfolio is. And we typically say you want to be at around 65% loan to value, to if you're a risk averse landlord like me and you want to basically sleep at night, that's probably the kind of LTV you want to be, and also to access the best possible products. Anything to add, Abraham?
yes, it showed it like while you speak in the stress test page, that is also for us taking the rental to a lower level and see how it will impact your portfolio. So let's say that at risk, some of the properties will be untenanted, or some of the properties you will need to reduce the risk, the rent. So you can see what is your risk level. So you need to be above 100%, because usually the monthly costs are constant. They will not be disappeared, but the rent might be disappeared. So if you want to see in edge cases, like at risk, what is your situation, you can see it here, how much margins you have on each property and on the entire portfolio. And we will show in the next point how to analyze properties. And the good thing with Lendlord is that you can also analyze and evaluate your existing properties for the long term. So you can put long-term assumptions. So you can take worst case scenarios that the property value is going down, and you can see what it will do to your equity and what it will do like to your ROI in 10 years. So it's also something that you can do in Lendlord, and this will be affected in the performance view, where you can see the next 12 months estimated cash flow, cash on cash, ROI, the cap rate, and also the 10 years equity, the 10 years ROI. And I think that we have other fields that you can search and add. 10 is property value, 10 mortgage balance, IRR, equity multiple for investors that understand those metrics and want to use them. So this is also a great way to evaluate your properties for the long term and understand, okay, what I'm going to have in 10 years. Vanessa.
Okay, Damien's got another question. Is there any data that allows you to see how you're doing against the market? Any form of kind of benchmarking?
Yes. So I think this is great to start. That's the third point because it's related. So the question from Property Tribes was, how can a newbie confidently assess deals?
It's not just newbies, is it? I mean, everybody's got to be very, very accurate in their deal analysis. Long gone are the days where you used to do a little kind of back of the fag packet calculation. It just doesn't cut it in today's market. You need to be very accurate, understanding what you're purchasing. You know, you could have a range, 2 or 3 properties that you're interested in, and you be undecided, that landlord dilemma or conundrum that we were talking about earlier. And one way to make a decision would be to input the metrics into the deal analyzer and see which property comes out on top. We've got loads of demos and information about the use of the deal analyzer. And I do stress it is the most sophisticated deal analyzer on the market. Well, I say on the market, it's not because it's free to use, but the most sophisticated deal analyzer out there, and gives you the most granular level of information about each property deal. So it's a great risk mitigation tool. It's a great tool to guide you towards the best possible deal for you out of any properties that you are considering. It's very good also to not waste time on things that don't work. So even if you've got, say, 10 properties that you're considering, before you even step out of your front door, you could run them all through the deal analyzer and say, actually, those 7 don't really work at all. I'm left with the 3 best ones, and those are the ones that you want to focus on. And Avram, I think that's a point worth mentioning, because a lot of landlords don't actually apply a cost to their own time. And they should really think about that, how they invest their time, and the activities that they invest their time in that are going to bring them the greatest return. So it's good to use the deal analyzer as a filter. And also just to mention the flip analyzer as well, we are hearing reports of shortages of supplies of building materials. Costs are going up very, very dramatically. And sadly, we heard this week that a very well-known West Midlands developer has gone into administration. And the reason given was because they just couldn't get the built materials, and the costs had gone up so dramatically that their developments were no longer viable. So again, when we're in somewhat challenging market conditions, it's very, very important to get your numbers right.
Yes, definitely, absolutely. And I think the deal analyzer on the Lendlord platform is a great place. You just need to put the numbers. You can start with the purchase price and the expected rent, and the platform will use defaults to show you the metrics for the first year and from the long term. And starting this point, you can just tweak the data. So you can play with the cash investment, how much you want or how much you need to put in cash or how much you can. In the purchase costs, it's important to take into account any refurbishment, furnishing, or any other costs. Be on a safe side to put the costs that you think that you are going to spend when you purchase this property. And then, of course, see how it impacts your first year metrics and the long term, because basically you will need more cash. The mortgage calculation is based on the property value or the purchase price, the lower. So this is like will basically say what is the LTV. The cash investment will take the entire purchase cost. So the cash investment basically, together with the loan, should cover also the stamp duty, the closing cost, and the refurb cost. So it's also important to take a look on that. Then put all the monthly expenses that you think that you are going to have on this property. And you can also play with the long-term assumptions. So what is your expectation for property appreciation, rental appreciation, and annual inflation? Now, for the question in the chat, so how can I get more market data? So as you see here, so you have some information about what is the EPC level of this property, the floor, the total floor area, the property type. This is something that we extract from the web. You can also, we use our API property data to give you average yield on this postcode and 5-year growth. So basically you just need to enter any property and you will see the data coming in. And if you want to get more data, so you can use the get estimation near the property value to get the estimation based on these parameters, like indication of the value of this property. You can do the same to get estimation on the rent. So you can see what is the current rent in this area based on the internal area in meters. By the way, it's important that we put it in meters here. Number of bedrooms, number of bathrooms, and you can see what should be the monthly rental for this property. And you can use the postcode information page. And here is also, you have up to 3 searches. If you want more, you need to upgrade to our premium plan. But here you can get much more data on the postcode. So you can see the 5-year capital growth in this area. You can see the property demand analytics. So how many properties right now for sale? Is it a buyer market or a seller market? You can see some analytics on crime in this area. Also rental demand. We don't have it for all postcodes, but usually we retrieve that. A price per square foot and some demographic data in terms of politics, commute method, and age distribution, and some data about the schools in the area. So this is very important, and you can use the postcode information page for new properties, but also for your existing properties. So you can put basically any postcode that you want. After you analyze the deal, you can save it as a prospect. Once you save it, and you can add this thing, deal details, so you can add who is the agent name if you want, date of viewing, if you have some links that you want to add, you can do it. Then on my portfolio, I will deselect the properties and I will select the prospect properties. So this is my pipeline list. So you can see, I need to delete some, but you can see my prospect properties and I can just review them and I can switch to the performance view so I can compare the next 12-month cash flow, cash on cash. So you can also compare my pipeline. And we also have a flip analyzer for flip projects. It's very similar. It starts with typing the address and then get some information, put the purchase price, basically how much you want to offer and how much you're going to sell it and how much you're going to spend on refurbishment. Then you can play again with the cash. You can see the loan options. You can see, you can use, by the way, Lendlord. We have our own bridging lender. So you can get a quote for bridging finance and you can complete online. We can complete in 5 days for bridging finance and you can track all the process online on the Lendlord platform. So it's also a great way to understand the rates that you can get for bridging finance if you need bridging finance for this flip project. So, so Lendlord is a great place to also to analyze new deals, to evaluate your existing properties, and also manage your pipeline.
Awesome. We've got a question from Tamara, and she says, can the software suggest to you based on your portfolio what ownership they should best sit in, whether that should be private, sole trader, limited company or hybrid model? No, I would say to that one, Tamara, just purely because your tax position is very much based on what your end goals are. And it's probably, well, no, it's certainly very important to get professional tax advice and structure your portfolio in the correct manner for what you're hoping to achieve and your unique set of circumstances. Everybody's got very different circumstances, and what's right for one person is not right for somebody else. So this is one of the rare occasions when actually forum questioning and maybe Lendlord is not the appropriate source of the answer. You do need to speak to a tax professional, make sure that you're structuring your property business in the correct format. Is there anything you wanted to add to that?
Yeah, two things. First, like, you're totally right. It's better like to get like advisor for this kind of stuff. The good thing is that you can first share the data easily. You can export the portfolio data or like arrange a view for him. We recently added the ability to invite team members, so you can invite your partner. Perhaps you can just invite for one day or like someone like the advisor, and then you can just like delete his access. We don't have permissions yet to review just specific pages. And the second thing, so the data is very important for the planning. So in Landlord, you have the first step, just like to arrange the data, like show like which are like on company ownership right now, which on private. And the other thing that we have, it's not 100% accurate, but we have the estimated P&L report. And here we do provide a breakdown of the potential tax for your company properties, whatever for the individuals, and we take into account if it's a profit from a company or it's like an income as a private individual. So I think I agree. You need to assess this information with your accountant in terms of the tax calculations. The data can be 100% accurate. For sure, if you use our linkage to bank accounts, so everything is reconciled. Mm-hmm. And you can also link your Zero. So if you use Zero as accounting software, you can link your Zero organization to retrieve the transactions from there. So for instance, if you already link your bank account to Zero, just link your Zero account to Landlord and then retrieve just the transactions. And then you can reconcile them to specific property, track the performance and the cash flow.
There you go, Tamara. Hope that answered your question. If not, you can use the Calendly link to book some time with Avram and the Lendlord team. If you've got any specific questions you want answered or you want your own demo, etc., that is what it's there for. Nick will put the Calendly link. There's also the chat bot or box on the Lendlord website, which is manned during office hours, and there's always somebody there to answer your question or to assist you if you've got any questions. We are just, we've really run out of time. We had one final landlord conundrum that we were going to consider, and that is a very commonly asked question as to whether you should go for an interest-only or repayment mortgage. And I'm sure most of the people on this call are informed landlords and understand that interest only is generally agreed to be the best way forwards for buy-to-let for many, many reasons, which we don't have time to go into. But of course, using the Lendlord software, you could actually run an exercise between interest only and repayment to see the difference. There's some useful metrics there that Avram is pointing out to you. And it may be that you want to have some properties in your portfolio that are on a repayment basis and some on an interest only basis. The only time I personally believe that you would probably ever need to, or even want to consider a repayment mortgage, is if you had very significant other income and you weren't really using your portfolio for net cash flow month on month. Do bear in mind that most interest-only mortgages have the facility to overpay by up to 10% per annum. So you can actually use that facility to pay down the capital on your interest-only mortgages anyway, and kind of do it under your own steam at your own time when it suits you. So it's a lot more flexible to have your interest-only mortgages, have a lower monthly payment, higher monthly net cash flow, and obviously be able to access your equity and so on. And if you do want to reduce your debt or reduce your LTV, then you can pay up to 10% down per annum on an interest-only mortgage with most lenders, but obviously do check your terms and conditions on that. Anything, did you want to do very quick demo, Avram, or anything else to add?
Just use the deal analyzer, and you can use it also for your existing property. Just click from the My Portfolio on 3 dots, deal analyzer. And here you can see, so from the deal analyzer, you can use the prospect report. So if I switched here in the loan details to capital and interest, when I access the prospect report, that can be also exported to PDF, so you can share it with whoever you want. You can see that in capital and interest, the equity will go up over the years, and the mortgage balance will go down. And you can see it also in this table, the holding period breakdown. And if I would change, and also, of course, it will impact your first metric, long-term metrics. This number is your long-term ROI, so how much you're going to do on your cash investment. So if I would change it to interest only, you will see that the growth of the equity will be lower. So if I go here now, you will see that even if the property, so the equity will benefit just from the property value because the mortgage balance will remain the same.
Well, worth noting as well that the way it's calculated with regards to capital repayment mortgage, for the first half of the mortgage, roughly speaking, you're actually only paying off the interest. You're not paying off hardly any of the capital at all. And that kind of is another reason why just to go for interest only anyway, because for the first 10 years, you're actually not going to see the benefit of having a repayment mortgage. Of course, it's horses for courses. Some people feel more comfortable with a repayment mortgage. They like to know that at the end of the mortgage term, they're going to have an unencumbered property. I completely understand that. But what many people do is use the overpayment facility on interest only. And perhaps, one strategy that's very common is when you get to the end of your landlord career, you sell half of your properties, pay off those mortgages, pay your capital gains liability, and with what's left, you pay down the mortgages on the remaining properties that you've decided to keep. And of course, you're going to keep the best performing properties in your portfolio. I've already identified mine through Lendlord, so I know that when I come to end my landlord life, my 2 holiday lets are going to be in there, my 4-bed house in High Wycombe is going to be there, my 4-bed house in Basingstoke is going to be in there, and a couple of my London flats are going to be in there, and they will end up unencumbered when I've disposed of the rest of the portfolio. So that's the plan. Okay, I think we've just about reached the end of the webinar. Any final words, Avram? Let's just remind everybody again, Avram and the Lendlord team are going to be at the Property Investor Show at London Excel in October. Tickets are free. Avram is going to be speaking on a panel debate. I'm going to be speaking on holiday lets. So do get your tickets. Nick's just popped the link for the free tickets on the screen. Do get yourself down there. Come and say hello to myself, Avram and Nick. We'd love to see you there. Any final words on today's webinar, Avram?
Yes, we just, I think that we have so many things that we can add, but we don't have time. But so feel free to schedule a call with me. Nick, if you can put also the link to sign up to Lendlord. So if you haven't yet, this is the time to create your free account and start playing with that. Put your data, play with the deal analyzer, get the insights, review the mortgage options, and contact us. We love to get feedback from users. This is the way that we enhance the platform. So we are welcome from feedback. So, and any issue that you have, just raise it and we will take care of it. So thank you very much, Vanessa, and thanks everyone for joining us.
Yes, thanks everybody. This webinar recording will be on Property Tribes tomorrow, probably after around about lunchtime. It will also be on the Property Tribes and the Lendlord YouTube channels. We do invite you to subscribe to our YouTube channels as well. And do check out the Lendlord Digital Life category on Property Tribes for all our previous webinars about the functionality of Lendlord. But for now, all I have to say is thank you very much to everybody for giving us an hour of your Thursday evening. We really do appreciate your support, your great comments, and we're just delighted to be working with so many landlords who are looking to educate themselves and really drive their property property businesses forward. And we want to support you in every way possible to do that through Lendlord and indeed through the content shared on Property Tribe. So thank you very much. And we'll see you around about the social web and on Property Tribes. And we'll sign off now. It's good night from Avaram in Tel Aviv, and it's good night from myself here in beautiful Guildford in Surrey. Thanks for joining us.